TGIF face. How's everyone doing today? It's the final countdown to the NFP. No effing problem. Okay? Everyone doing okay? Hello, Tiana Riddle. Nice to meet you. Amir, Vince. Everyone have a decent week experiencing gravity and stock indices. Roberto and Rick. Raghu. Paul Franco, how are you? Great job you're doing, my man. Nitish. Anthony Higgins. Nice to meet you. Hope we're adding value. Yeah. Hope we're adding value to what you're trying to accomplish as a trader here. Good. Mission accomplished. That's our mission every day, to build up and edify traders. So I try and do that every day. So yesterday, when the dollar was exploding after the ECB, just a little bit of my thought process, and I mentioned it here, while the dollar was smoking, going parabolic, and I talked about the weakest response to a strong dollar. So this is how I think. If the yen yesterday, during Draghi, when the euro was crashing and the dollar was going parabolic, the best it could do on a dollar move like that, since it is a US dollar pair with other characteristics, what would happen if the tailwind went away? So, compared to, you short the weak sister. So what was a weak sister? It wasn't, this was the big break. Anyway, here's a dollar. I don't want to confuse anyone by the way it's pairing, but this is what the dollar did. And this is what the yen did. Okay. Therefore, when the tailwind of a strong dollar dissipates even a little bit, here's your result. Everyone with me? So, it's very important to, know correlations and how the jigsaw puzzle comes together. And then you're going to notice things like, wow, the dollar's strong, but US dollar yen isn't doing much, which puts it on your radar as a preferred short. Everyone with me? So you notice when something isn't doing what it normally should do, tells you what's going to happen when favorable conditions begin to dissipate. And it's the other way for longs. When something should be getting smashed and killed, and all it's doing is dropping in sympathy, like perhaps copper is right now, falling in sympathy with gold and silver, right? So, you want to buy that break in copper. Sure, there's trades to the upside in gold. In fact, yesterday when gold was steady, I look at things like miners, they were all up. Therefore, the pop that we're having in gold to set up shorts down the road. And then there are some Bradley dates due. I don't know if anyone follows them, but they work a lot of the time. It could be a low. Bradley advocates will think this is a low of the move, and we're going to blow off. And you know what? I've begun to accept that anything. I have accepted it, that anything can happen. But look at the S&P. All the people that are bullish, especially since it took out the 200-day. And the week we're having this week is what I was looking for last week. So I was a week off, but it's happening here. And we'll see. It's going to take a major rally for the week to change, in my view. Major rally. And I would say NASDAQ needs to close 100 better. NASDAQ is on its weekly moving average. It's daily. It's taking it out. Okay. So this is the 7,000 level, was a big level I talked about. We're threatening it. So the only thing that would tell me, hey, you know what, this Bradley date is real, would be the 2-week off number of 70.80, and look how it held it here. And look what it bounced back to. And now we're down here. So if we start closing back above 70, 80, I won't have as much conviction as I have now. So you don't have to agree with me. I just want to make sure you understand the rationale, because, you don't want to just take trades blindly, even if they work. Yeah, it's nice. Maybe it drops some money into your account, but it's my belief, everyone who's here and is listening to us every day in face, that you guys really want to be self-directed. Okay. And if you become too dependent on anyone, how are you going to become self-directed? So it's important when you're hanging out and you're looking at other people's work is to dig into it and discover or learn the whys, okay? Why? So that you have those whys in your toolkit. And one of the best ways, you know what I'm going to do now, right? One of the best ways is to become part of our community. And what a opportunity for people on the East Coast to go see the team. Steve and Greg is there, exploring America. I think he brought a friend, and I think there was some kind of headline in the New York Times: two wild and crazy guys land land in New York City. Anyway, he brought a friend, Greg, and Steve, I think, is on his way. He's driving his driving his new Mercedes over. He's driving to New York from Greece. And hope everyone had a great week. We're working hard for you 24/6 with the best analysis and team concept on the net. The way to say thank you is to subscribe. I should have mood music. Okay. Well, I don't think we could have, yeah, I guess we could have music, Zig. So it's going to be interesting to see what Blake is thinking here. I know he was a bit negative yen, and he's been short EG and I think working Aussie yen and everything. So how are you today?
I'm glad that it's Friday. How are you doing?
I'm okay, buddy. I'm doing okay.
Well, yeah, actually, I was such a schmo. I covered my euro pound early yesterday after the ECB. I covered it just below 86, and I'm like, you know what? I'm just going to get out of it, knowing that these big Brexit votes are coming next week, and of course it drops like literally 50 pips after I get out of it, which is not a small chunk of change either, especially when you're dealing, in the size that I was dealing with, and it went where I thought it was going to go, and it's like,
Let me
but
ask you this, Blake, because I've
yeah.
been seeing on Skype, um, your wife isn't feeling good. I think the kids, you guys have been passing something around in the house.
Yeah,
Doesn't
it's
that affect you when you're, being a caregiver? You're probably, taking care of everyone, bringing them soup and stuff. Doesn't it affect you a little bit when you're trading, when you have things like that happening at home?
Well, I bought the dollar max yesterday at 40 when it broke out above 40.
Yeah.
I got out at 47 because we were up near these highs, and I took a nice chunk of money out of it. And I'm like, I don't want to sit in this while I drive my son to the
Okay.
doctor's
See,
office. And,
that's
and
what I
then and then it went from 47 to 60. So
yeah.
did it affect me?
Yeah.
Yeah, it hit my pocketbook pretty good. So what probably was a $70 copay doctor trip ended up being like
Yeah, I know.
a lot
Don't
of
even
money.
say it.
So
Yeah,
yeah,
let it go. Yeah,
so
but I just a point for other people that it's hard to at times have that kind of market pressure on you when you have personal pressure on you.
yeah, it's not a. By the way, the crude oil is getting smashed too.
Yeah.
We're below 55.50 here. Yeah, it is a lot of pressure, and but it happens. It's part of life. I mean,
Yeah.
the thing about the markets, and you know, and I live in a more challenging time zone than I'd say a lot of people. If you're in Europe, it's I think a little easier. It just kind of depends where you're at and what your life is like, and you know, I can't complain a whole lot, but yeah, if things go down in around my home, and kids have to go to school, and people have to go to sports, and you know,
Yeah.
life has to go on, and I work from home, it sometimes can be challenging, and but I don't want to ignore the fact that I'm not out digging trenches out in the desert. So you know, it's not
Yeah.
you know, it's not like I have a bad job. It's just, yeah, there are certain things that definitely affect my life and what I do. So a couple of things that we need to discuss ahead of today's jobs report. Which, by the way, since Steve is traveling and I don't want to leave Stelios, Andre, and yourself alone through the numbers, I'll be here through the numbers.
Okay.
But the euro, and then I'll pass it over to Andre, who's got a good look on he'll have a good look of harmonic patterns in the FX market. He's got some pretty good looks, especially on the peso. But let's talk about the euro and where we stopped yesterday. So we stopped at the 618 retracement of the 2016 lows to the 2018 highs. So even though we hit a new trend low and we broke out of this range, and if you didn't read if you're, well, obviously if you're a ForexAnalytix subscriber, you knew about this, but even if you weren't, I blogged about it yesterday. And so again, once again, if you're not a ForexAnalytix subscriber, you should be you should at least be reading the blog. Well, you can get at least one idea versus, you know, you might not get, you know, 30 ideas a day of things that are moving, but you might at least get one. So the euro dollar hit off the 618 and we have bounced. Now, this is going to be pretty important going into today. There are some economists that are expecting a pretty weak number today. So, you know, and we're looking for 180,000 jobs. U.S. employment, 180,000. I think Bloomberg probably has it right around the same. Bloomberg has 180,000 jobs right here. You can see there. So if that number comes in, you know, weak, and we print, you know, 150,000 jobs, 130,000 jobs. There's a risk that the euro dollar reverses here and we bounce back into this range, which does a couple of things. First and foremost, we get a false breakdown, and that's I don't want a false breakdown. All I want is us to move out of these ranges. You know, that's I'm really hoping for the euro to go to 110 now. It's not, and I could care less. I could care less if the euro is going to 116 or 110. I just want it to go somewhere. I'm not. I'm pretty agnostic as far as, you know, which direction that the market's going at this point, because I really could argue several different points. So I don't care so much. I just want us to move. The flip side to that is if we post a good number, which, you know, a lot of people could argue that maybe the numbers are fudged a little bit, whatever. If we have a good number, maybe the euro does move lower, but it doesn't make sense. You know, I do actually think that the numbers are probably going to reflect a pretty good, pretty decent number today. But again, if it's weak, you know, the euro could give us this false breakdown, and next thing you know, we're trading back in the range, and that's what I don't want to happen. I want to see us have a relatively decent number. 150 to 180 would be a decent number to see. Now, this is 127% extension of this last move higher. It is the 618 retracement of the long-term chart. So that's what makes this level right now super duper important. You know, right here, 111.80, roughly. Okay, that's going to be a really important number. The cable's been a little volatile this morning. You know, and just keep in mind we have, you know, several key votes coming in next week, so you got to be very careful here about trading the pound. That's why I've gone hands off in the cable, and even the euro pound. I'm tempted to short the euro pound because it's still below 86 up here, but at the same time, I'd like to kind of see where we close by the end of today. The Aussie's weak. Now, I'm surprised that we held above 70 cents. The Chinese trade balance numbers were weak, and I'm surprised the Aussie is holding up. I think anybody who's bullish the Aussie is desperately trying to hold the Aussie above 70 cents, because if we break below 70 cents, the risk of us slumping back towards 68 cents, I think, is quite high. So, you know, the Aussie is still, it's making its way lower. We're working off oversold conditions, but I think the Aussie eventually does move lower. I am working off an Aussie yen short. So I do have a Aussie yen short. We closed below the 618 retracement yesterday. So I'm keeping a core. I've been shorting it since yesterday afternoon. So I think my average is probably like 78.45 or something. But what I'm looking for is more of a break of this range to give us this double top or range extension, which will take us down to 75 and a quarter. That's what I'm looking for with the Aussie yen if we break 77.50. Now, one of the things that I want to pull up here, let me pull up the S&P, because a lot of people have looked around and said, well, why isn't the here, let's delete all this stuff. Why isn't the Aussie yen lower? You know, and if you take the S&P and you compare the Aussie yen, which I think is a very good correlation, okay, you can see how the Aussie yen is really underperforming the S&P. But if the S&P does indeed roll over, which obviously I'm bearish the S&P, I think the S&P is, you know, rejected this 2820 level. I think we're moving back down towards, you know, 2600. That's if you know, use Forex Analytics, you can see the pattern in play here for the S&P. I'm looking for 2635, which is initially a 38% retracement, I believe. Let me double check that really quick. Yes, the 38% retracement. If the S&P retraces down to 2635 or 2636 here, then the Aussie yen should trade a lot lower as well. Now, obviously, I think we can, you know, have the potential of going even lower than that. I'm just talking initial targets here. But then I think the Aussie yen eventually rolls over. So that's what I'm looking for with the Aussie yen, and that's why I'm on the short side of it. Okay, because I am looking for the eventual breakdown below, you know, this range low and to extend us lower. Now let's go a couple other pairs really quick.
Yeah, maybe it eats into the flash crash candle, Blake. That'd be nice, huh?
What's that?
Maybe it eats into the flash crash candle.
Yeah,
New Year's.
you know, it might. I mean, you
Because
know,
I mean, what's really there? You know, I mean, it traded there for a second. You know, it's not like it was a big accumulation area.
yeah, and a lot of times when you get these spikes like this, you know, it's not uncommon for us to revisit these levels. It's not. You know,
Okay.
this seems like a logical point. Now, does that mean we're going there today or tomorrow? No,
Oh,
but
of course not.
I
Yeah.
think over time, that's not that wouldn't be uncommon for us to go back and see, you know, the 70s.
Was it really a low?
Yeah. Was it really low? Just to retest those prices. So I think it is possible, especially, you know, the S&P is looking weaker. It looks like we're rolling over. S&P could pull back here. It looks like the Aussie yen could also take it in the chin. So that's why I'm working a core position right now in the Aussie yen. It seems like a little bit more safer for me, a little bit more safer place to be versus the euro pound, which, although I think the euro pound is technically broken, you know, there's there's so many things happening this next week. It's like, yeah, I don't think I really want the exposure. Let me grab a couple other pairs really quick. Here's the Kiwi. Kiwi's in this triangle. We're pivoting off the 200-day moving average. And we got a pretty nice bounce on the Kiwi right now as it stands. I'm a little hesitant about trading the Kiwi while we're, in this triangle range. I guess you can call it like that. Just kind of, nervous trading it. The dollar Canadian, still very bullish, the dollar CAD. Now we do have Canadian data as well. So if you see the Canadian employment is expected to come out, we're basically expected a flat number. But the dollar Canadian, I think, is at risk of still going higher. A lot of people are trying to fade this move. A lot of people are trying to, get short the dollar Canadian while it's up here. And I understand that we're at 161% extension, and we're probably a little overbought intraday, but this thing has been a juggernaut to the upside, and we have this really big channel, and and with the dollar breaking higher, a lot of people are saying, well, the dollar is breaking higher against everything, and dollar Canadian didn't move higher. But the dollar CAD, for argument's sake, is really just all it's doing is it's consolidating its gains. It's just catching its breath, and we have still some overbought conditions here. I would rather buy the dollar Canadian on dip. I don't have dollar Canadian right now. I'd love to get long at 134 if possible. If we can have a weak U.S. number and a little bit stronger Canadian number, a dip down to 134 would be welcome in my book to be on the long side. So we'll see what happens with the dollar Canadian. We are closing in on the 161% extension. It's hard to, it's in a situation where I go, all right, it's too overbought to be long, but it's too strong to be short. So that argues at this point in time, no sense in trying to fade it. Right now, for me, I'd just rather buy dips, and if I can't get a dip, then I'm not buying it, but I'm not shorting it either. It's in too much of there's too much bullish momentum here at this point. Dollar Max, we have a nice bull flag pattern developing. This is a big breakout, guys, big breakout. We're stalled around the 38% longer term, but we continue to get some risk aversion. Emerging market currencies should continue to underperform. So bull flag pattern will probably take us closer to 20 over time. So I've been playing the dollar max to the long side. Even this morning, I bought and sold a little bit. I didn't even tell the chat room about it. It's just kind of a small position, just kind of scalping around. Because I bought it at 53 this morning when we dipped below these lows, and then I sold it at like 56. I just kind of played it long down here and sold it up here because I can clearly see we're in a bull flag pattern. I did send out the chart for ForexAnalytix, but I'm just kind of scalping around. I'll let Stelios talk about the U.S. dollar Norwegian krona, but the U.S. dollar Japanese yen, really, with yields coming down, and Coach, we talked about this. You got bonds moving higher. Okay, look at the bond market.
Yep.
Just a complete reversal. Bonds are ripping, yields are dropping, dollar yen is starting to follow suit. Then you have, stocks under pressure too. So, the dollar yen, you can see
right there,
probing some pretty good support here, but the dollar yen is at risk, I think, of moving a bit lower. And a weak number, 120,000 jobs, 150,000 jobs, 140,000 jobs created. Dollar yen could slump again. So I would be very careful about being on the long side of the dollar yen at this point, ahead of these numbers. Now Stelios should be here. Good morning, Stelios.
Good morning. Hello.
So, Stelios, can we get a little update on Theresa May? Why the pound is selling off this morning? You got any flavor on that?
Yes, she has been speaking today and answering questions from journalists, and she has been continuing with her Project Fear rhetoric. You know, any deal other than mine is not a good thing. And I'll just mention a couple of quotes she said, and you know, they're pretty punchy. She said, and I quote, "No one knows what will happen if lawmakers reject my deal," which is it's quite a strong thing to say. You should be making plans for any alternative. She said the only certainty would be ongoing uncertainty, and also that the Brexit delay could lead to a second referendum. And also, finally, she did say Brexit may never happen at all if MPs reject my deal. So it's pretty strong words, and like I said before, it's this trying to put fear into people to at least I read it this way, into going along with her deal, which for the moment looks like it's not going to be voted. So this is what she's trying to do, and and Sterling doesn't like it that much today. So
so what do you think is going to happen here? What do you going into just a quick 2-minute? What do you think is going to happen going into next week? We got three important votes.
Yeah. I think the first vote is going to be rejected. I mean, there's nothing new, and it was
about
rejected.
Her plan. This is her plan.
Exactly. Yes, it's her plan on Tuesday, and there's nothing new. Unless there's something new, I think there's no way this is going through. So then the next vote is going to be a vote to allow a no-deal Brexit to happen. I personally don't think MPs want to be responsible for something like that, so they're going to not vote for that. Even the ones who want to leave and who don't like May's deal, I think it's going to be very difficult for somebody to put the name down to saying yes, let's have a no deal and see what happens with with nothing behind. And then when that fails, then they're going to vote for an extension, a possible extension of Article 50, and that will probably happen. And then who knows, the European Union, they've been saying about an extension for 2 years. Theresa May mentioned that she would want an extension which would be short. So will it be 3 to 6 months? I don't know. What can change within these 3 to 6 months? Again, I don't know. I do think, though, that in the end, after all this is done, and when it gets extended, I think that somehow, don't ask me what's going to happen, but I think that somehow both sides are going to, take a tiny little step back and make a compromise. It's going to be a pretty crappy deal or whatever it is, but I think in the end we're going to avoid a no-deal Brexit, and that's what the market thinks as well, because both sides have a vested interest to not see a no-deal Brexit without any preparation. It's going to hurt both sides, that's for sure.
Yeah, very good. All right, Stelios. Well, we are 2 minutes away, 2 minutes and 2 minutes away from non-farm payroll. I'm going to pull up the Bloomberg so you guys can see the numbers of a couple points of focus here that let me just pull this up just a little bit. Okay.
Actually, before the numbers come out, it's probably worth mentioning just another thing. The yen has been strengthening overnight because we had some pretty good numbers out of Japan.
Good, yeah.
GDP was expected to rise from 0.3 to 0.4% quarter to quarter. It came in at 0.5. Current account came better than expected. Household spending much better than expected. So the numbers, they've been quite mixed for Japan, but today they were pretty good. So that's one of the reasons why the yen has been outperforming.
Gotcha. All right, thanks, Stelios. Now we have so the change. This is right where my cursor is at, 180,000. This is what the headline number everybody's going to be looking at. Also for Canada, the headline number is right here, 1.2 thousand. So basically looking for flat. Let's see. Also, let me pull this down just a little bit. Okay. I actually have to make that even bigger. All right. Labor force participation rate, watch that number. Average hourly earnings right here. Unemployment rate 3.9% expected to drop. So heads up, numbers coming out less than 30 seconds.
We have Canadian employment numbers as well, like you said earlier today.
Yeah, do me a favor, keep an eye on the CAD. I'm going to keep an eye on the dollar yen.
Yeah, sure. Okay.
20 seconds.
All right.
Here we go.
They're late.
Nope. Right now. All right. Wow.
Oh, 20K.
20,000. Holy Moses. That is a weak number. My system even froze.
Canadian number very strong. Expected flat came in at 56K.
Wow.
Yeah. Oh wow.
Look at dollar CAD.
S&Ps. Look at S&Ps.
Wow.
My system actually froze.
Yeah. Okay. What else? Let's have a look. Average hourly earnings came in better than expected, but revision was slightly lower, so that's probably a nothing. Building permits, housing starts slightly better, but really payrolls is a big one. Unemployment dropped, and participation rate stayed the same, so that's good. That's a good drop in unemployment rate from the US. So really, just the headline payrolls number that was bad. Actually,
Wow.
everything else was good.
Nice action in Aussie yen for you, Blake. Good
Looking
call.
for, yeah, thank you. Yeah, like, wow. The dollar Canadian dipped to, I have an order that just did not get tripped, which really bums me out. I had an order at 133.92, so that didn't get hit, of course. Wow, this Aussie yen is going to get smashed, which I like. I'll take that.
You
Crazy.
guys ever hear the expression, anything that could go wrong in a bull market doesn't, and in a bear market it does?
I haven't actually heard that expression.
Yeah.
You know, because when you have a bull market, you get all these, negative news events, and it's always a dip to buy. And when it's a bear market, it doesn't work. The good news even fails. So just one of my expressions in my Pinkertism book.
All right. Well, I loved Pinkertisms, I tell you.
Yeah, I could tell.
Sorry, I'm just adjusting some orders here. Man, my system actually went slow, which is crazy. It never slows down. Man, sorry, I'm just making some adjustments here.
Maybe the Fed will ease in March, huh?
What's that?
Maybe the Fed eases in March, like or follows Draghi at the next meeting with these kind of numbers.
Hold on, I'm just sorry, guys. I'm just trying to have.
Okay, let me take this opportunity and mention one more thing, which is worth mentioning. We had this morning we had Germany factory orders, which was a huge miss again. So another came in at minus 2.6% month on month, was expected at plus 0.5. So another big miss from German numbers. And really now, if you look at it, the past month or two, something like 4 out of 5 numbers have been pretty weak. So Germany usually leads the way for the Eurozone, so it's definitely not looking very rosy at the moment.
All right, yeah. Well, hey, I'm going to pass it over to you guys, and what I would do. Wow, this dollar Canadian is still coming down. Might actually hit my limit here. I'm hoping it does. Yeah, I mean the dollar CAD actually. Let's see if we can. So remember, this is a breakout point here, so that's why I'm kind of getting long ahead of this number,
bringing the market back a little bit.
Yeah. So, I mean, the Aussie yen slumped, and then it came back. It's just kind of bouncing around now. Okay, guys. Well, hey, I'm going to pass it over to you because I know you're going to bring over Andre, and that's going to be pretty exciting for you guys to be able to get some harmonic flavor today, especially following the numbers. So TGIF, everybody, and for those of you guys that are in New York, have a great time with the team. Stelios, I just passed it over to you.
Have a great weekend, Blake. Hope the family is heals with Godspeed. You guys are all good by the end of the weekend.
All right. Hey, thanks, guys. Have a great one. I appreciate that, Coach.
Okay, bro.
Okay, thanks, Blake. Actually, I don't have that much more to say, so I don't know if Andrea, you here? And Forrest Gal was asking if Gregor can chime in. He's actually in New York, so he's going to be here from Wednesday onwards or whenever it is. I don't remember. Okay,
they're filming the sequel to what was that movie? We're Two Wild and Crazy Guys. Remember that movie still? Who was that? Steve Martin and somebody, I forgot. No, it wasn't.
I don't remember. I don't remember.
Okay, you're too young.
Okay, Andre, you are here, so I'm gonna make you the presenter. Hold on, Andre Cardoso.
Yeah, they're going to bring this market back. I just want to tell people, someone told me it's a Bradley turn date. It's an astronomic type of thing. I've seen some pretty interesting turns on that day. So today we're doing the market.
Hey, Andre. How are you doing, man?
Hi.
Bill Murray, though. Okay. Yeah. Hi, Andre.
How are you, Dale?
Good, buddy. Ready to see your artwork.
You're
the Picasso of technical analysis.
Let's try. Let's start with S&P because I was following that specifically moments ago during the news event. So this is we are now trading below the weekly resistance and the daily resistance, as we can see here. I published this chart as soon as the market starts to approach this level, and we are trading. Well, the pattern actually it has completed at 88% retracement. It has printed a few points above, and I still expecting at least a 38% retracement for S&P 500. So that will put the price at 26, 27. Eventually, it will find some pressure to the 200 moving average, crossing from or approaching from below. I will not be surprised to see, as I said, so the 38% retracement, previous structure support level. We can see this level acting as actually strong support previously also. So I can see the price finding some pressure at these levels for S&P. Let's jump into. I want to share that Mexican peso chart with you because I remember when you asked me last week if I study a lot this behavior, if I spend a lot of time identifying this behavior, and as I said before, so I spend at least the last 5-6 years following this specific pattern. And as we can see here, it's a perfect 26-18 trade setup. I want to give sequence to this chart with Dixie chart on a daily time frame, but I will go there in a minute. So what we have here is a technical double bottom, as mentioned before, a broken neck, a resistance above the neck, and a pullback to the golden Fibonacci level, the 61.8 retracement. This is the bullish 26-18 trade setup, and we use by default a symmetrical behavior from the bottom to the next resistance above, projected from the golden Fibonacci level. So that will put the price approaching, as we can see here, the 200 moving average. We're still inside this ascending structure. I will not be surprised to see some relief here. We are trading just a few points above the weekly resistance. I will not be surprised to see the price trying to find some support at this previous resistance level and then a trend continuation above. So now I want to jump into to Dixie on a daily time frame to show you the previous market behavior for this specific pattern. So, and for that we need to go back on a daily, as I said, and we need to go back down to the previous major support level. So I have also those arrows there just as an indicator for us. So this is the similar behavior that we have now on Mexican peso. So this is a 26-18 trade setup. We have a double bottom followed by a broken neck, validating the pattern as a potential reversal behavior. And as soon as the pattern finds a resistance, it has started to fall, and it has found resistance, it has found support at the golden Fib level. So from here, an extension above, and we see the price trading the 261.8 the 261.8 extension above the neck zone. So if we take this similar behavior for Mexican peso, if you consider that a similar behavior as on Dixie, I will not be surprised to see later Mexican peso trading or searching for those fibs above. For that to happen, I believe we need to wipe out this previous structure support level. Let's say the 150%, 141% extension. Trading above this level will increase that probability. For now, as I said, I see this ascending structure developing. I will not be surprised to see some relief from here, retesting this weekly support, weekly resistance now as a support, and later eventually the price will search for those Fibonacci levels above, retesting the highs. So this is a nice introduction to the 2618 trade setup. I published a few patterns in other instruments also, but this one is working very well. Now we have a few other, and let's go back on Dixie again, just to show you my view here. Let me go into a 12 hours time frame chart. I was expecting this previous structure support to act as a resistance, and it has failed, as we can see here. Actually, I need to decrease my time frame a little bit. Let's go into a 4 hours time frame. We can see here the 168 extension acting as potential support level. The market has printed this kind of a double bottom, or actually a 3 drives almost. No, Dale, I believe we can consider this as a 3 drives pattern. And then the market has bounced from this level. So I was expecting the 224 extension to act as potential resistance level, and if that fails, obviously we will see the price trading higher above this level. Previous daily resistance, it's now positioned above. And well, we have at this point we have no specific harmonics on Dixie. Actually, not only on Dixie, we have nothing very specific. In general, we have just a few couple of charts that are that's still developing, and some
fib extensions above yesterday's high where it could go to, Andre.
I'm sorry, Dale, can you repeat?
You have fib extensions above yesterday's high where it could go to, the Dixie?
In terms of harmonics, we don't have a specific one. At this point, we don't have a specific one. We have a kind of, but it's not an harmonic pattern because it fails the specific criteria.
Okay.
In terms
I
of
just wanted to
Fibonacci.
make one point on the 3 drive. I saw you mentioned it.
Here,
I want to make sure. Are you a golfer?
No.
Okay. Anyway, for guys that are golfers, 3 drives are not 2 mulligans, and then you get to tee off again.
Yeah.
All right, everyone know that? Give me a Y if you know that. So you can't go up to the tee and say, well, I might hit a 3 drive, not 3 driver, where you get 2 practice shots and the 3rd one counts.
Yeah.
Okay. Yeah. All right, buddy.
So based on what we have at this point, let me just curiosity, let me just measure this extension below. And let me try to identify. So the market has failed the 168 extension below, so the market stays between the 141, 150% though. So actually there's no criteria in terms of Fibonacci's. I have no decent criteria to say to you, okay, the market will trade the 113 or the 161.8 extension. At this point, I have no clear picture for Dixie. As I said, I was expecting this previous structure resistance to act. It has failed, and now I need to wait for the market to develop and to try to identify the next pattern to try to take advantage from it. But at this point, we have no clear idea. Not only for Dixie, but also for euro versus dollar. In a similar situation. I can jump into metals. Let's check gold and silver. As mentioned before by Steve, I believe earlier, the market has reacted very well from this 88% retracement. This is the default BAT pattern completion point. So the market here has synced from there, and it has failed, at least until now, the market has failed to achieve the default 38% retracement for the pattern. And we see the market starting to bounce from here and starting to recover above this previous ascending structure. So the market has violated that structure. It has printed this ascending structure above another 3 drives pattern, and then the market has found some support at this trend line, this previous structure support. I believe if the market resumes above this structure, eventually it will threat again the daily support above at 1320, around that level. What I still expect, and because we have this previous structure support approaching from above, at this point I will not be surprised to see a retest of this level and then the 38% retracement. If that happens, a major or a pullback eventually, and this is pure speculation. Obviously, we need to wait for that for the price to develop. But I will not be surprised to see something similar as an ABCD pattern or a 3-wave structure somehow pushing the price to previous structure resistance. It will act as support level. Again, we have also the support trend line from the previous ascending structure, which may act as support again. We never know. But at this point, we are retesting the previous structure ascending trend line as resistance. I still believe there's room below to achieve at least the default target for the pattern, still positioned at 38% retracement for gold. At the same time, we have actually Dixie is rejecting the weekly, as we saw here, is rejecting the monthly resistance. Dixie, actually the market has nailed that previous structure highs and it has rejected for now. At the same time, we have silver completing I believe I shared these charts among our community, completing this shark pattern at 1618 extension. So the market somehow has found some support between the 1618 extension, the 50% retracement, and it's now threatening again the 200 moving average. So recovering above, or let's say trading above this moving average, I believe the price will search for the default target at 50% retracement. We have also previous structure support a few points below, so let's say a minimum of 38% retracement is expected for silver from here. If that happens, obviously, and if followed by gold, obviously we will see gold trading above that structure that I showed you before, and this is silver. S&P, I show you S&P already, yes. I believe.
Yeah.
Mexican peso. We have also pound versus New Zealand, which I still expect a new high on pound versus New Zealand to complete this shark pattern at 1618 extension. So at this point, somehow the market must find some support at this level. If that fails, obviously the pattern will no longer it will no longer be possible to form the pattern, and we need to search for other motives or other patterns, and the price needs to develop into those. So at this point, I still believe there's a possibility to form the pattern at 1618 extension, which will put the price at 196. And this is the shark pattern, which can extend to the 224 extension. So at this point, and let's check the market conditions at this point. Let's push our RSI. Let's see if the market is trading oversold, overbought at this point. So we have no overbought conditions, and we have what we call bullish hidden divergence developing at this point. So we have the previous lows or the previous support level. Here, it's the fractal support level, the 4 hours fractal support. Synced with the RSI, it's this low here, and we see the price already trading below that level on RSI. Actually, the indicator is already printing new lows, and the price is rejecting at the 200 moving average. It's rejecting to trade lower. So at this point, we have some signs of bullish hidden divergence, which suggests more bullish upside momentum or more bullish momentum from here. Obviously, if that fails and if the market violates this previous structure support, it will increase probabilities to trade even lower. At this point, I'm still expecting a new high, at least to form this sharp pattern a few points above the golden fib, but the 618 retracement, previous structure support also. Pound versus Aussie, similar, completed. A second top. I'm not sure if eventually that will depend on cable also, but it may print a new high and print a 3 drives above, but we are trading what we call the confluence between the 88% retracement and the 127 extension. This is the default bearish Gartley pattern, which by default will search for the 38% retracement, also previous structure resistance level. It will turn it into a support if that happens. So considering the Gartley pattern, we need always to respect the previous structure highs for those harmonics. So the price still respecting these previous highs. So the probability to achieve those default targets still present in this pound versus Aussie. We have also euro versus pound, which has completed another shark pattern. But now we are rejecting the 224 extension in the completion point. So I need the price clearly trading above this Fibonacci level. But the pattern was printed at that fib. Somehow we can face this as a double bottom eventually. And obviously this fractal is our next zone. Trading above this next zone will increase probabilities to trade even higher. And if that happens, the market needs to find some resistance at some point, and it will need to pull back. And always the same. The theory is always the pattern is always the same. So we need a breakout of the neck. We need the price to find some resistance, in this case above the next zone, and I need the price trading the golden Fibonacci level again. So that will print the 2618 bullish trade setup, and by default we project symmetrical behavior from that Fibonacci level. Obviously I'm using this example with the resistance printed above. We need to wait for the market to print that resistance and to measure and to adjust our Fibonacci levels to those highs once detected or once identified. This is pure X speculation at this point. So I will expect, based on the double bottom, we can expect later the formation of the 2618, which requires the pullback to the golden fib.
Nice. You have anything on oil?
Oil.
Someone's asking for oil.
Let me
They're asking for a million things. But breaking down.
Yeah, breaking down, we have the previous daily support, which is this fractal here, previous structure resistance, now support level, 200 moving average approaching. This is a 4 hours time frame chart. At this point, let me just try to identify this fib level here. So
this is analysis on the fly, guys.
This is analysis on the fly. Yeah.
Only pros can do that.
There's one eventual based on the most recent fibs and criterias. If we search for the 127 extension, eventually let me draw that harmonic for you. So this is one eventual butterfly pattern at 127 extension. So this will put the price in the middle of, well, in no man's land at this point. So we are between the 50% retracement, the golden fib, no perfect confluence between Fibonacci's to increase the probability to form the pattern there. this is just based on the default, based on the Fibonacci's between those swings. It can happen. We can also see this developing into a major bat pattern below at 88% retracement. But there's no clear, at least for now, there's no clear idea. Yeah, there's no clear idea.
What would the major bat look like if we had a major bat? What would that look like?
Can you repeat, Dale? I'm sorry.
Oh, what would a major bat pattern in crude look like if it ends up developing like that? Okay.
Yeah, it's retesting previous structure lows, previous structure support. I will not be surprised to see that happen. But this one may happen too. The price will somehow, if the price touches this level, the market will print a pattern. But we never know if the pattern will work or not. If there's market conditions or strong enough to pull back, to push back the price again. But based on the criteria and the fibs that we have at our disposal at this moment, we can see those two pressure levels, one at 227 extension and the other one below at previous structure, at the bottom of the previous structure.
Do you have anything prepared or can look at either copper or USD NOK for the last chart?
I have a USD NOK.
Okay.
I was actually searching for one potential short on dollar versus NOK. Let me show you my view. I will update this chart for our community also, but I take the advantage obviously of being here and sharing also among our viewers. Dollar versus NOK. This is the previous crab pattern printed at 168 extension as I shared when the pattern gets completed. And then the market has printed a three-wave structure with support at the 200 moving average actually. Yeah. We can identify a strong, and this is a 12 hours time frame chart. It's the same on a daily. We will identify this bullish divergence here with the market forming a double bottom with RSI and with a new low on price. So we have a clear bullish divergence, ABC correction, and an impulse above. So that's what I still expect. So at this point, what we have based on the most recent swings, we have the shark printed at 224 extension. So the market is now threatening that 224 extension, which can produce some bearish momentum from here. So we have also the default targets for that pattern. So based on these swings, we can see, we can identify the default targets for that pattern positioned between the 38% retracement, 50% retracements, golden fib. So let's use the default 38% retracement as a minimum expectation for this shark pattern. At the same point, we have this major one. So this first impulse momentum followed by another correction, another three-wave structure, and another impulse above. So I still believe there's room, and note that we're still trading inside this ascending structure. This is a parallel structure that I draw here, and nothing assures us the market will not retest those tops again, obviously. But based on the Fibonacci's and based on those harmonic patterns, we have the shark pattern, another shark pattern in this one, a major one at 224 extensions, just a few points above. So let's say we have two shark patterns, two major shark patterns, one at 161.8 extension, which may extend or which can extend to the 224 extension. So at this point, we're still inside what I consider a shark tank, or we are ranging inside a shark territory. So at this point, I believe, and I still see these. I still see a possibility or a probability actually for the market to react from there and to print some bearish momentum for sure. Yeah.
What a great presentation, man. I'm telling you, if they had a market technician art museum or Hall of Fame, I would nominate you.
Thank you very much, Dale.
You know, you
Thank
should your charts don't belong on a screen; they belong in a gallery, Andre. All right.
Well,
Anyway,
it's
huh?
it's I believe it's similar to everyone who trades the market on a specific technical approach. So if you develop that approach and that technical analysis, you may end developing
Yeah.
also your artistic
Yeah.
artwork around
You
it.
get to
So
you get to
it's
vent
the
your creativity
yeah,
into
it's the
your
way that I
technical
like to
work.
present things to others. You know,
Yeah.
if we, I can draw those harmonics with with 4 lines for you. I don't need to
Right.
draw a rectangle, and I don't need to play a lot with those Fibonacci's. I can jump inside the webinar and say, okay, there's a pattern here, here, and there. So but without showing you all these draws and without showing you, but that's what keeps me motivated to present my work, but in a way that is pleasant for people. That's it's simple to interpret and to get synced with those processes once you get familiar, obviously. But that is similar with any other trading strategy that you want to develop. So we need to get synced, we need to get familiar, we need to drink that strategy and to eat that strategy at
Yeah.
breakfast, and we
Live
need
it.
to sleep with those. So at the beginning, I confess that when I went to sleep, I dreamed about the market conditions and about those triangles and all those them
Yeah.
lines.
Yeah. Well, there's a guy who lives and breathes what he does.
Yeah,
And
yeah,
you
for
know what,
sure.
Andre? I want to thank you for making me and others that watch you and follow your work better traders.
Thank you very much. That's the main goal, and my main objective is to try to share good information with people that allows them to improve their capabilities. So that's an honor for me to be positioned in that stage, Dale. Thank you very much.
Mission accomplished, Andre.
Thank you.
Cardoso.
All the best.
All right, from Portugal, live from Portugal, the technical artist, Andre Cardoso.
Thank
And
you very much.
that's a wrap, everyone. Hope you had a great week. You're very welcome, Dylan. Good hunting the rest of the day. And you're welcome, Marius and Alina. You're our trading family. And remember, what's the tagline, Andre?
Don't just count your pips, count your blessings.
Yeah, and you're what when you were added to the team, that was a big one. All right,
Yeah.
so that's a wrap, everyone. Have a great weekend. You're very welcome, Rick. Enjoy the rest of your day. We'll see everyone Monday, and don't forget we'll be live streaming the presentation by Joe and Steve, and maybe Greg is going to be talking Monday. It'll be outside of face hours, but you'll be able to watch those guys. If you're in the area, stop by and have a cocktail. Steve spent about $2,000 on a suit, and maybe you could spill your dribble a little of your drink on Steve. See if he has patience. All right, everyone. Adios. Love you all. See you Monday. Thank
See
you
you.
again, Andre.
Thank you very much. Have a nice weekend.
All right, buddy.